Well, global equities have seen another decline over the past week. So now we've seen 6 straight weeks of declines on the US market. And we've got to go back to 2002 to see a losing streak like the one we are currently in. And it certainly seems like there's plenty of uncertainty out there for investors. And this is why we are seeing declines for global equities. We've also got some global economists out there, prize-winning economists, in fact, Nouriel Roubini, who won the accolade of actually being able to predict the global financial crisis. He's out in the media talking that there could be some major events coming up over the next couple of years. He's predicting that 2013 could be a bad year when the perfect storm of global economic events really comes in. So this will be one to watch for down in the future. The Kiwi dollar remains pretty strong, and even last week on Thursday night we traded up close on 83 cents against the US dollar. But we have pulled back since that period of time. We start this week trading around 82.20 against the US. The US Department of Agriculture sent an early warning shot across the bow of some of the global agricultural commodity markets last week with their latest supply and demand estimates. The US Department of Agriculture are estimating that corn stocks aren't going to improve in the year ahead, and in fact stocks are going to remain very limited, production will be down, and this is meaning that we aren't going to see any relief in the tight supply issues that we are seeing at the moment. The result of this did see prices last week spike up, particularly for corn. And in fact, corn prices are effectively double what they were this time last year and are trading at almost record highs and even higher than levels of wheat prices at the moment. The reason I do mention this is that it will have a big impact on some of the livestock sectors out of the US market, particularly for dairy and for beef producers, as corn is a major feeder put into these systems and it will limit farmer margins. Well, US beef markets have also been influenced over the past couple of weeks by the higher corn prices, and I suspect that some US beef farmers are really going to be squealing at the moment because they are being affected by the higher input feed costs, and really this is impacting on their margins at the moment. However, prices have also been coming back over the past couple of months because we've seen more supply coming on board out of the US market. And this has been a result of the combination of both higher cow prices and more cows coming to the market, as well as more supply coming to the market because there is really just no grass around due to some of the droughts in the US market at the moment. So this has had an impact on prices over the past couple of months. But the good news is that this will leave a supply gap in 2012, and New Zealand farmers could take advantage of this. New Zealand farm gate prices have come back as a result of the lower US prices as well as a high New Zealand dollar. But looking out about 12 months from now, we could really start to see prices lift as there will be a shortage of supply in the US market.